Hey guys, thanks so much for joining us. On the line we have Andy Hoffman, the media director from milesfranklin.com. And Andy, I was watching your video vlog from Friday, and boy, you covered everything. First of all, how are you?
I'm doing fantastic. I think it's our first chat of the new year.
Well, it is, and let's kick it off with the precious metals update, and maybe you can help remind people why the 3% yield resistance on the 10-year T-bond is so darn important. You said, and I quote, "The 10-year Treasury yield is perhaps the most important yield in the world." Why is that yield so important, and how do you think the NFP report on Friday helps play into this topic?
Right, my article was called 3.0%, enough said. This is not the first time that we've observed this. With every time rates start to approach significant numbers, all of a sudden economic data miraculously turns around and goes down. Because let's face it, the Fed is doing QE, and whether they're tapering at 75 billion or doing 85 billion, or the 130 billion a month that I wrote about last week in the tapering mirage, the fact is they need to keep interest rates at ultra low levels, not just low levels, historically low levels, which is so paradoxical, so unnatural, considering we have record amounts of debt. The fact is that back in September, when rates got to 2.99%, on September 5th, miraculously, the next day, September 6th, you saw a horrible NFP report, and all of a sudden that aids the Fed's efforts in what I call turbo QEing rates back down. And the same thing happened here. I mean, this number, of course the numbers are terrible to start with, but it was so beyond the scope, because all of a sudden the waiters and bartending jobs that have been there every month were gone. It rings of them just trying to make things so bad that it eases their efforts to push rates down. The slightest tick up in rates, as we've seen in the rolling over real estate market, kills the global economy, and that's why they can never actually taper.
Well, let's talk about the hocus pocus of the paper Ponzi, because everybody listening is well versed in the idea of 100 ounces of paper metal for every one outstanding physical. I think you'd argue that the number may be even higher than that, more paper ounces per ounce of physical, whether it's at the Comex or elsewhere. But this jobs report and this idea of unemployment in this country being at whatever they claim it is, it's just so darn insulting, because if you know what's really going on, what's happening is people are falling off the unemployment rolls, and then this government is no longer counting them as even real people. So then the unemployment rate falls, and it's just absolute nonsense. It's just hocus pocus. 200,000 jobs is what Wall Street expected. The number was only 75,000 jobs, and by your own analysis, half of those jobs were temp jobs.
Half the jobs are always temp jobs. In fact, what we were predicting here was that the rate would go well below 6.5%, not 6.7, and it should have, because as we know, 1.3 million people lost their unemployment benefits on December 28th, and yet they reported the labor force only went down 550,000 jobs. So that number is going to go down even further. And remember, there's still another 3.6 million people who are on schedule to lose their benefits in 2014. And I highly doubt that most of them are going to get jobs. So I think we could see 5% quote unemployment in 2014 or lower, and it's not because people are getting jobs, but because they're losing jobs. In fact, in my 2014 predictions article last week, one of my predictions was the glaring weakness in true U.S. unemployment will become widely understood. And remember, last week when the Fed did or 2 weeks ago, their quote tapering, they took away the 6.5% threshold to get rid of zero interest rates, 6.5% unemployment, and basically said we're just going to get rid of it entirely, because they know very well that the entire world realizes it's a farce. And it's no different than the difference between, the other prediction I have in this article is the gap between paper and physical prices will expand. And again, you're looking at the Comex. As we speak right now, I am declaring a default for the December contract, because there are still 200,000 ounces standing for delivery. Here we are on January 12th, and they still haven't been delivered from the registered category. But even if they don't, we are down to 416,000 ounces from 3 million last year, supporting a Ponzi scheme which is far greater than 101 on the paper to physical level. So I think you're going to start to see worldwide people start to understand these glaring differences between the fake reality that the government creates and what's actually going on.
What is the current official unemployment rate in this country?
It's according to Friday, 6.7%. I
Uh,
mean, down from 7.0% last month, even though there were no jobs created.
Yeah, I heard you say 6.7. I just want to verify that because I thought we were up around 7.5. I mean, it's stunning to me. It's hard for me to even get my brain around this one because we know 91.8 million people are not working in America. And with 1.3 million people scheduled to come off unemployment rolls in December, it's just completely outrageous, Andy, when nearly 100 million able-bodied Americans are not working, that we can even live in a paradigm where the government would say to us with a straight face, the unemployment rate is only 6.7%, when really the unemployment rate is well over 20%.
But the whole point is that people are starting to understand this. Again, most people don't own stocks anymore, and most people don't read the financial news. CNBC has its worst rating since 1993 right now. I think it went on air in 1991. So it's not like people are listening, just like it's not like people are in the stock market anymore. So they can say all they want, but the fact is people are not working. And they could say that the paper price of gold is this, but the fact is there's no gold left on the Comex. The gold in the GLD is all leaving. The gold in the LBMA is all leaving. The Germans can't get their gold. I mean, it's quite remarkable that the U.S. Mint could have record sales of silver eagles last year. When I'm speaking from, Miles Franklin, one of the largest bullion dealers, Western demand was terrible last year, and it's because the Easterners are buying everything in sight. And by the way, the Mint hasn't published any numbers about Silver Eagle sales since I think like December 10th. So they shut down for the end of the year early, and they still haven't started up yet as far as I'm concerned. So clearly they are having another shortage issue. They're just not telling you about it. And again, the world will understand this, and they'll understand it very, very quickly. We had several silver shortages last year in both January and April, and there wasn't even a crisis. Just think of what happens when we have the next crisis, like in 2008.
Well, let's talk about silver and gold. You hit on the Comex. I want to talk to you about the December gold contract. I think according to Harvey Organ, 63 ounces left the registered inventory. So the Comex is down to 416,000 ounces. You covered that in your vlog, and you said in that quote, that's barely $500 million of physical gold supporting this 100-to-1 paper Ponzi scheme. And there's still 200,000 ounces standing for delivery in December. Is that right, Andy?
Yeah, that's what I'm saying. I'm calling a default. I'm not Harvey Organ. I'm not the expert, but this stuff. The contract should have settled on the 31st of December, and yet we still have 200,000 ounces worth that have not been taken out of inventory. I mean, we were at 3 million ounces in April, just before what I call the alternative currencies destruction, when the cartel took gold down $200 in 2 days, and now we're down to 400,000 ounces, which, as you said, is worth almost nothing. But it should be 200,000 ounces. The fact is, the average over the 5 years up until April was about 2.5 million ounces. And whether we're at 200,000 or 400,000, the fact is there's no gold left. To think that every day the price of gold, 99% of the price movements in gold occur in this 90-minute window at the open of the paper market at the Comex, up until 10 o'clock when the PM fix occurs and there's no more physical trading, shows you how ridiculous it's become. There is no gold on the Comex, yet we're seeing all the price movements go there. That will end. Will it end this year? I don't know, but I remember last year, 2013, as it turns out, February was actually a bigger delivery month for gold than December was. Typically, December is the big month. And here we are coming up on the February delivery month with almost no gold in inventory. So, will the powers that be able to stave things off another 2 months? I don't know, but something is going to give at one of these physical exchanges in 2014.
Well, we typically see manipulation twice a day in this market, as you just noted. And last week, Andy, with silver finally popping back up over 20 and gold just under that 1250 resistance level, which you call a line in the sand. It's funny that that we're still talking about these levels. It's surprising to me to see silver down here at 20, and the powers that be must really be terrified of letting silver run free, because it would send a message to the world. If silver could do what Bitcoin has done, it would send a very strong message to the world that this monetary joke called the U.S. dollar, this paper Ponzi scheme, is over. It's definitely long in the tooth. Our last video was called $1,000 an ounce silver, Don't Laugh. What do you see in 2014 for silver and gold? Because we just spoke with David Morgan, and he sees the possibility of $30 silver in 2014, which would be a 50% return.
Well, I'll say one thing. I invite anyone to look at, for instance, bitcoinwisdom.com. It's one of many sites that shows real time. If you want to see what a non-manipulated market looks like, meaning what the world looked like up until 10 or 20 years ago, watch it trade. It trades randomly. It'll have big moves in either direction and correct itself like a normal market. Completely the opposite of what you see in gold and silver with all these hits like this flash crash we had on Monday where gold was about to break, as you say, 12.50, and then it suddenly dropped $15 in 5 seconds. This is what these guys do because they're so desperate, and the fact that they're doing it with gold and silver below the cost of production shows you how suicidal that they feel they need to be in the near term. Obviously, something big is going on behind the scenes in the physical world. As for what's going to go on this year in gold and silver, prices, I don't make. You see in our prediction article, we try not to make predictions. But what we've said is we think the disparity between physical and paper is going to separate further this year, which is only going to put upward pressure on the paper price. You can't sit below the cost of production. We've had a 65% decline in capital expenditure announcements by the mining companies, and there's a whole bunch of mines that are either being mothballed or on the verge of it. Just from a supply standpoint, you have to see higher prices at some point soon, or there'll be no mining industry. And you couple that with the pressure on the cartel, with all the physical buying, with the actual money printing going around the world, and in our view that the economies of the world are getting worse, not better. And it's hard to believe that prices won't be certainly at David Morgan's levels later this year. And but I'm not looking for the quote 50% gain or even the 25% gain. I'm looking for something major to happen. And whether it happens this year or next year or this week, I don't know. But we will look up at some point in the not so distant future, and silver won't be $30. It'll be $300 or $3,000, and who knows what that'll be in real terms. I wrote a piece the other day highlighting how John Williams, who tends to not make, shadow stats, he tends to not make predictions, but he's outwardly calling for hyperinflation in the States to start this year. God forbid that actually happens. I think the price of silver is going to be not an issue at all. It's going to be how many ounces you have.
Well, I want to talk with you about hyperinflation, but before we do, let's circle back and talk about that flash crash last Monday. I think it's important that people remember that it was the 6th time in 4 months that the Comex had to close gold trading due to a lack of liquidity. And you noted in your vlog that someone threw 4,200 contracts at the market, at market price, and that's $500 million worth of gold. And the price of gold didn't just fall. You note that it literally just repriced by about $15 in a flash.
Yeah, and if you look at the chart, remember, this was, gold was steadily rising, of course, at the same time of day as always when it's allowed to. The Dow was actually falling. It was starting to be too much of a disparity between gold going up and the market going down. And just as it was about to hit 1250 at 10:14 a.m., this is right after the PM fix when physical trading closes for the day. And by the way, 14 minutes after an abysmal ISM non-manufacturing number, something that's bullish for gold. It didn't just fall, as you said. I looked at my screen, it was 12:48. A second later, it was 12:35 or 12:37 or something like that. And of course, they shut the exchange briefly because someone took out the bid stack with, as you say, 4,200 contracts, which is the same amount, $500 million, as the entire registered gold inventory. We've seen this more and more lately. It's an act of desperation, but to me, it's a suicidal act because the whole world sees this. The Chinese see this. The Russians see this. Even CNBC at some point sees it enough to realize that there's something wrong, and it's just going to hasten the physical outflow from the west to east. And that's the prediction for 2014. That outflow from west to east only increases, causing an even greater strain on the physical supply.
Yeah, and I want to add to what you were saying about CNBC being at historically low viewership. CNN is going through the exact same thing, so much so that they want to get out of the news business. I talk about this a lot because I think it's a real feather in the cap of the alternative media, that alternative media is growing because people are searching for truth. People are looking for candid, honest, even if it's bad news, people want real news. And So they're turning away from CNN in droves too. Now CNN, as everyone knows, is a major news network supposedly, but at any given moment throughout the day they only have 90,000 people watching. That's the average throughout
And a lot of them are like my gym. You know, any gym has it on. So this is not people who consciously put this on. This is institutions. There's almost no actual people. And to add to that, and yes, and CNN has been quite incompetent. On top of the fact, as you say, that people don't go to the TV for news. I'd love to see what Fox's ratings are, because the people that are listening to Fox, it's more of a political thing than a news thing. Mm-hmm. And I think people are getting fed up with the political thing as well. I would bet Fox ratings are down because not only people don't want to go on TV to hear news, they don't want to go on TV and hear one-sided partisan politics. They want to go on the internet, as you said, and make their own decisions.
Yeah, that's right. I saw a statistic just a couple days ago, I think. Might have been Activist Post. I'm not sure which one of our alternative media friends posted this, but the statistic was talking about young people, I think college-aged people, and less than half of them ever watch television for their news. So it's a dying demographic. It's the older generation that would be tuning into CNN at all. And to your point, in the airports, where they just leave it on 24/7 as a propaganda tool.
Those count as ratings, but people aren't necessarily watching them, and certainly it's not people putting them on. Yeah. I mean, it's amazing that they would think anyone would listen to a guy like Kramer, who's lost so much money for people, or Larry Kudlow, or any of these guys. And then you see the people that they put on, they're cheerleaders. But again, people don't own stocks anymore. We've been at record lows of retail participation in the stock market. So it's not so powerful a tool anymore. Remember, all that the powers that be have left are money printing, market manipulation, and propaganda. But no one's listening to the propaganda anymore, and very few people are in the markets anymore. So and of course, money printing affects everyone in a negative way. So. That's why we predict something is going to happen dramatic, because their tools are just running out rapidly. And now they're putting Janet Yellen in office, who's even more of the party line uber dove. So as soon as some crisis comes about, she's going to make Bernanke look conservative.
Well, let's talk about hyperinflation before we lose you. You were talking about the Japanese sales tax hike happening. They're going to hike the sales tax in Japan from 5% to 8% beginning in April. The Eurozone, Andy, is a disaster with all-time high unemployment in Italy, Greece, and others. Venezuela, you note, is the poster child of hyperinflation around the world. Can you flush that out for us, and how does Venezuela compare to what's happening in this country and maybe what's happening in Japan?
Yeah, I mean, when I talk about Venezuela being the poster child, I'm talking about the Caracas Stock Exchange. I think it was up 500% last year. Meanwhile, their CPI, and of course that's massaged, as you know, it was up 50% last year. They have food shortages. You can't get toilet paper. You can't get milk. The government is on the verge of declaring martial law. Remember, Chavez died last year, and the new guy is even worse. So, I mean, we're talking about a nation under collapse. And the stock market was the best performing stock market of the year. Same thing happened in Zimbabwe. And look at Greece. Look at how the year started. Greece up 10% in the first week of the year, despite their record unemployment and their record deficits and all these things going on there. What we're starting to see is this hyperinflation of markets that's created by money printing. And it starts out with nominal gains and with real gains, and then all of a sudden it becomes nominal when the inflation overtakes them. Because, believe me, the markets of Spain and Greece and Venezuela, and the United States for that matter, are not going up for any other reason than money printing and having it injected into the markets. And that's why you're seeing this desperation to hold precious metals down, which won't last much longer because there's not much physical left to sustain the game.
Let me ask you this. Can you flush out for me how you think the inflation will eventually bridge into... Well, of course it has. We're seeing fewer ounces in a cereal box as the price rises a quarter, right? I mean, we're seeing inflation in real-world consumer goods, maybe with the exception of electronics. But at what point do you think the hyperinflation of the currency will become evident to every man, woman, and child, and everybody on a salary? At what point will hyperinflation become evident to people in this country? Because I've been saying, here's what I'm trying to say. What I've been saying is that the inflation is in the stock market. But at some point, as people benefit from the rise in prices of stocks and they get their 15 cap gains after, holding a stock for a year, that's easily transferable into cash, into the real world. At what point are we going to see all of this stock market money spill into the real world, Andy, and cause really consumer goods hyperinflation?
Well, again, it's like a totem pole, and the world's reserve currency is at the top. So you've seen it around the world already. We talk about the fragile five currencies. That's India, Indonesia, South Africa, Turkey, and Brazil. They've had massive inflation over the last year. In fact, the average currency is down 30% against the dollar in the last 2 years, and something like 20% in the last year, because since the Fed started with their QE3 and 4, they've exported this inflation around the world. So it's being seen everywhere. That's why India's done its crazy policies of subsidizing rice and trying to prevent gold from being purchased, all those things. But here in the States, it's been more subdued because the economy is so weak. But believe me, it's there. Beef and chicken prices both hit all-time highs last month. Gasoline is at the highest price at this time of year that it's ever been. Obamacare, does that not count as a tax? As we have to go to socialism to pay for all the people that can't pay for themselves, all the fees and taxes. So it's been more subtle here, but it's certainly increasing. And, as the money printing increases worldwide, particularly if the Fed has to actually turn around and stop pretending they're tapering and actually, move forward, you're going to start to see a real velocity of money change, and, that's when the end game starts. If John Williams is correct, that's this year. If not, maybe it's next year, but it's not 5 years from now. It's going to come. And then again, there's all these black swans out there. Anything could happen. We could have another Cyprus. Something could happen in Greece. We could have something in Syria. You could have a whole bunch of things that are waiting to happen, accidents waiting to happen. And so, no one knows how it will happen or when, but it is going to happen on a relatively near-term basis in the scope of history.
Well, why don't we conclude with this? Let's talk about the 101st year of the Federal Reserve iron-fisted rule over our country, with the mantle being handed off from Bernanke to Janet Yellen. I was at the club the other day, Annie, running on the treadmill, and I was watching CNN because I like to keep my eye on what the enemy is up to and what they're reporting. And they went to break, and the commercial that came on was a commercial for a new Chase credit card. And two gals were having lunch together and fighting it over their points. Each one wanted to pay for the lunch because they wanted to get their Chase points. And then, of course, at the end of the commercial was the fine print, 19.9%, 22%, or 30% interest based on your credit approval and credit history. And I just thought, how apropos, how funny that CNN, this loathed propagandist news source, is being sponsored by Chase, Rockefeller, the Federal Reserve. I mean, you have to be awake to recognize at that moment what I recognized. But boy, it's funny as we move into the 101st year of Fed rule that it's just going to be more of the same. There's been no conversation nationally about disbanding the Fed and taking our monetary policy back out of the control of private bankers. And meanwhile, these bankers are the same advertisers that support CNN and Fox News that spew the propaganda. It's stunning.
Well, of course, they're all the dollar is what their weapon is. The fact that it's all in a nutshell right there. The Fed funds rate is 0% and will be there for at least 3 years, according to the Fed. But the 0% is only for the banks, the too big to fail banks like J.P. Morgan. For the rest of us, interest rates are going up. They're going up in the market, and they're going up for borrowers who can't get loans unless they pay 20%. No, there's going to be no call to shut the Fed down. The Fed will implode upon itself, and then and it'll be an anathema, and everyone will realize it doesn't work anymore. Because right now there is an iron-fisted rule, and people are too lethargic to understand, to care or understand what's going on. They just want their checks. They want their unemployment checks, their food stamps. But at some point, the hyperinflation will take over and destroy everything, and the Fed will just implode upon itself. Will it be this year? I don't know, but it's not. As I said, it's not 5 years from now. It's coming.
All right, let's wrap this up with a talk about psychology and the silver price. In the interest of full disclosure, I want everybody to know that I've scaled my silver purchases back to quarterly now, Andy, and as you and I have discussed, I was buying probably every month, every 6 weeks, forever, and I'm a big dollar cost averager. But it's just been so frustrating down here. You start to lose, psychological momentum when really the opposite should happen. I should be scaling my purchases up. I should be doubling down at $20 silver because I do know what a real world value is. And beyond that, I happen to know that the miners because I have some inside sources and I know some of these CEOs of mining companies are hurting. They're terrified. They're in really, really a bad spot as the cost of production has now risen over the cost of an ounce of silver. So let's just talk a little bit about psychology. How are you handling it, Andy, at these $20 prices? And what would you recommend for people who are listening?
Well, I'd say certainly it's been more irritating and frustrating in the past year than I can remember, and I've been 100% in this sector since early 2002. But as far as my habits, it emboldens me more than ever. I use these hits to buy whenever I have cash, literally whenever I have cash, because as far as I'm concerned, gold and silver are money, and paper is not. If they want to give it to me at $20 an ounce below the cost of production, that's great. I'll still be buying when it's $40 an ounce or $50 an ounce. But as far as I'm concerned, it's not an investment. It's not like a stock where I'll buy low, sell high, or what most people do, which is buy high and sell low. To me, it's just a matter of whenever I have cash that I want to put it into real money, because I know at some point that real money is not going to be available anymore.
All right, Andy. Well, tell people how they can get a hold of you guys, because you do business a little different than some of the others out there. You guys actually will do business on a handshake, which I've always liked, and you get the personal service. If somebody wants to just pick up the phone and talk to a real warm body, they can do that with Miles Franklin.
Yeah, it's 800-822-8080. Actually, this is our 25th year in business because we started in 1990. We'll give you the best customer service, and we'll be competitive with anyone's prices. Plus, I think we have the best storage program in North America.
Hey, let me ask you this, just on a personal aside. I've always been curious. Are you a Silver Eagles guy, a Canadian Maples guy? What do you tend to do when you go out and you just want to buy a couple tubes of silver? What's your favorite?
Well, I think everyone should, as I wrote in an article, must own junk silver. You should have some in case of the worst case scenario. But aside from that, I think you need to have a diversified portfolio of physical precious metals. One, you have to decide what percentage of gold versus silver you would want to have, or platinum for some people. And then within that, I think you need to start with the core of the most liquid, well-known names like Eagles and Maples, and then from there you can diversify with some of the lesser-known things. But the main thing is I would avoid large denominations. Generally speaking, I'd say 1-ounce coins are the best value out there. Although some people like to diversify with some of the larger amounts.
At the end of your vlog, I noted that you had mentioned some of those Canadian gold coins, the old ones that the Canadian government has now announced they're going to sell to try to close their debt gap. It's hilarious. It's this whole idea of let's sell off the real assets to pay the bankers' debt. Did you guys get a hold of some of that gold, some of those gold coins?
Yeah, it's called the Bank of Canada hoard. Actually, they're going to melt down most of it into gold bar form. But a very small amount of it they're going to be selling to the public. They already have started selling, and we actually got a hold of it. They're pieces from the turn of the 20th century, and generally speaking, we avoid numismatics unless they're trading around the bullion melt value. But in this case, we think it's very interesting. Andy Scheckman wrote an article about it that's on the blog, and give us a call. Read the article and give us a call, and we'll talk to you about it.
That's cool. Okay, guys, thanks for listening. And Andy, thanks for your time. It's always a real pleasure.
And the same here. Love your blog. It's the best out there.
All right, thanks a lot, buddy. We'll talk to you soon. And please give me a call if there's any groundbreaking news, if there's anything that you've seen that you just absolutely need to talk about, if the Comex really does officially default. Let's just get you back on right away, because that's breaking news we want to cover.
Absolutely.
All right, man. Well, thanks for your time.
All right.
All right.
Talk to you later. Bye.